Hi, this is JT, founder of Find Your Edge Trading, and today we're going to go over how to use the exponential moving average, or the EMAs, as many people like to call them. Before we do that, make sure you like or subscribe to the channel, and let's get started. All right, and if you like this, make sure to like the video. So, we are looking at ES, which is the S&P futures, okay? Now, I want you to see this. This is a daily chart. And I want to first compare the differences between a exponential moving average and a simple moving average. Now, an exponential moving average will put more emphasis on the most recent candles in the period of that moving average, as opposed to a simple moving average. Every candle in that period will have the same weight. So let's look at the difference between the two. First, we're going to put on a simple moving average. Okay, and we'll just stick with the 9 simple moving average here, and we'll change the color to pink, and we'll make it kind of thick here, and we'll hit OK, and then we'll type in exponential, and that's my exponential moving average. By the way, guys, we are on Trading View, and we are going to change this one to orange, and there's the thickness there. Okay. And let's look at this on a smaller time frame so you can see it maybe a little more clear. Let's go to like a 5-minute. All right, and you can see that the exponential moving average is going to be the orange line versus the simple moving average, which is the pink line. And you can see that the exponential starts to move much quicker than the simple moving average. The simple moving average a lot of times lags price action, and therefore a lot of traders are hesitant to use SMAs as they feel like that they miss part of the move. Well, otherwise, people that like to use SMAs, they might see them as more conservative moving averages as opposed to EMAs, which will sometimes give you false signals. Now, that being said, I want to take a look at some other EMA strategies that people like to use. So we're going to look at 2 different crossovers that are primarily used more often than not, and ones that I also like to use. So we're going to leave this 9 EMA on orange, and we're going to change this, take this SMA off, and we're going to go back to indicators, and we're going to go to exponential again, and we're going to add that, and we're going to change this 9 EMA to, we can make this one pink as well, but we're going to change the time period to 21, and we're going to hit OK. And we need to make that line a little bit thicker as well. Let me do that. There we go. Okay, so the emphasis on crossovers, especially in regards to EMAs, is whenever the shorter period EMA crosses above the longer period EMA, that results in a bullish crossover. If a longer period crosses over a shorter period, that would be a bearish crossover. So, for example, the most recent crossover we had was the 21 crossing above the 9 right here in this area, as you can see right there. And so because of that, we have a bearish trend. And as you can see, the price of the S&P fell here. Okay. Contrary to that, if you go back here, you can see that the 9 EMA crossed above the 21 right here, and we saw bullish price action up until this point. So generally speaking, a lot of people like to use these, especially on a little bit larger time frames, as good general ways to understand the trend. As you can see right here, we had a very bullish trend crossover right here where the 9 crossed over the 21. And you can see that that 9 stayed above the 21 throughout this entire price action, up until finally right here it broke. But you can see that we had a very nice move right here available for people to take a trade. Again, this is just an ability for you to see the trend more clear. Again, another opportunity of that was right here. You can see that the crossover of the 21 above, excuse me, the 9 breaking below the 21 right here. And you can see that that held all the way down to here. So we had a very nice downward move right here. This keeps you from staying on the wrong side of the trend. A lot of times traders get stuck on the wrong side of the trend, and this is the perfect way for you to avoid that. Next, I want to use one other EMA crossover that I do like, and that's going to be the 14 and the 30. Okay. And we're going to switch this over to an hourly because I want you guys to see this. Now, I want you to see how strong this can be if you use this properly. You can see that we have a crossover right here occur that's bullish on the 14 above the 30, and you can see that price stays above it all the way up to this point right here. So we have almost a 100-point move in the ES right here, which is awesome. And then we get another bullish crossover right here, which gets topped out right here. So from here, as you can see, from this point right here to here, that's another 54 points. And again, a very big trade in ES futures. Now, these are just simple tools that you can use to help yourself remain on the right side of the trend, and this is the best way to use them. These are also two of my favorite combinations. I prefer, honestly, the 14 and 30 on bigger time frames, and then the 8 and the 21 on shorter time frames. When I say bigger time frames, I mean an hour or longer, daily, and so forth. When I say 8 and 21, I mean on shorter time frames, I go as low as 1 minute all the way up to, let's say, 15 minutes. All right. If you guys have any further questions or comments about what you like to use for EMAs, please let me know in the comment section below. I appreciate you guys joining and look forward to the next video.